Hello, everyone, and thank you for joining us today for our webinar, Benefits of Member Business Lending. My name is Kelly Blount, and I'm the Program Marketing Specialist here at General Electric Credit Union. Thanks to technology, we're excited to be able to connect with you on this awesome topic and wanted to thank you all for tuning in from the comfort of your home, work, or wherever you are today. And with that, I'm going to turn this over to Derek to introduce himself and today's guest speaker.
Hello, everybody. As Kelly mentioned, my name is Derek Ty. I am a business services support representative here at General Electric Credit Union. My job is to establish business accounts, products, and services for our business members. We offer a variety of business products and lending needs to help all business sizes to grow and to succeed. We began offering this series of webinars a few years ago to assist our business members improving the quality of their business financial life. If we can accommodate your business with some deposit or some deposit products or lending needs, please feel free to reach out to us. Now, I'm here to introduce Paula to you. Paula began her career as an accountant in 1992 and transitioned to her first love, which was working in the financial industry. She holds multiple postgraduate degrees in accounting, finance, and business analytics. Her education and experience have helped her in her roles at GECU, which included an analyst, a lender, and now as the VP of Commercial and Small Business Lending. Paula moved to the area 25 years ago and has made Cincinnati her home. She is married to her husband, Steve, of 22 years. Together, they have two daughters, two cats, two grandchildren. In her free time, she loves to read, hike, and cook. And now I'm going to go ahead and turn the floor over to Paula.
Thank you, Derek, for the introduction. I appreciate that. And I want to welcome everybody to our webinar on the benefits of member business lending. We appreciate your time in attending the meeting. Today, we're going to break down the different commercial lending products that are offered at General Electric Credit Union and the benefits of each of the products. So we're going to move on to the agenda. The topics, as you can see, we are going to cover our vision and mission, GECU member business lending, the GECU difference, commercial real estate, investment real estate, business lines of credit, equipment loans, construction loans, business credit cards, SBA loans, and the standard items that are needed to apply. And we will welcome your questions as well. As you see, we offer a variety of services, and our services and products are guided by the GECU vision and mission. Our vision and mission is to be number one in the hearts and minds of greater Cincinnatians through our mission to improve the quality of financial lives for employees, members, and the community. So our mission is to improve the quality of financial lives. We strive to stand apart, and business services is part of that GECU difference. The business services encompasses commercial and small business lending, along with treasury management and Derek's team, who serves as our main point of contact for commercial and small business lending members. The GECU difference business services. As a credit union, our goal is to empower our members. We want to provide the tools and resources necessary to help make better financial decisions. Everything we do is to improve the quality of financial lives, from offering industry leading rates to on-hand professionals ready to meet with the business member. Every decision that we make is to help our members financially thrive. As a not-for-profit financial institution, our end purpose isn't to make a profit, but rather provide members with better financial solutions. We're continually improving our financial strength, and we were recognized from Bauer Financial, who ranks GECU with 5-star performance, and IDC Financial, who ranks GECU as excellent. We are the second largest credit union based in Ohio with 223,786 members. $3.3 billion in deposits, and $2.9 billion in loans. Business services currently has $442 million in business and commercial loans and $144 million in business deposits. In the business services, there is 17 employees within our department, and we have lots of GECU experience and lots of financial institution experience, other financial institutions. So we come with a wealth of knowledge. Now let's talk about some of the business-specific member business lending products and services, and we're going to start with commercial real estate. The first one we're going to talk about is owner-occupied commercial real estate. And commercial real estate is a mortgage that is secured by lien on a commercial property. GECU offers competitive terms. So, for example, we offer a 5-year term with a 25-year AM, a 10-year term, and we can go up to 15 years for a term. Our conventional loans allow occupancy of the borrower's business to be as little as 30% of the total square footage of the commercial property, and we do go up to 80% LTV financing. GECU has also, we offer a renovation. So if an applicant wants to renovate their owner-occupied property, we have that option as well. And to talk about some of the great benefits, for owner-occupied commercial real estate, there's fixed financing options available. As you can see, we have flexible repayment terms, and there's potentially, you can garner equity in your property. So it's an asset. We're now going to transition to the counterpart of commercial real estate, which is investment real estate. Investment real estate, there are two components of investment real estate for GECU. We have commercial investment real estate. So examples of that include office buildings, mixed use, medical facilities, and industrial buildings. Again, terms of structures are very competitive. There is also renovation and tenant improvement available. The second is residential investment real estate, and the member business lending team, we really do specialize in 5 units and up. We have typically, we're at a 45-day close, and it has the same features as the commercial investment real estate. There are benefits to both, and they are very similar. If somebody is looking for steady cash flow, long-term security, it is a long-term investment. There are potentially good returns. So it's an excellent product here at GECU. And then we're going to move on to the business lines of credit. So business lines of credit provide a business with access to money that can be used to address short-term business expenses. The number one reason to open a business line of credit is to gain access to short-term funding. Most businesses use the funds to support financing for operational expenses, such as short-term expenses. Examples include if you're looking for payroll, financing inventory, increasing inventory, working capital. So basically a gap in cash flow. Business lines of credit may be secured or unsecured. Typically for the lines of credit over $100,000, collateral will be required, such as business assets or cash. GECU offers business lines of credit with lower annual fees, and the business line of credit does have a 12-month term, so it is short-term financing and will be reviewed every 12 months. The benefit of a business line of credit is tremendous. It can give a business owner peace of mind, cash flow management, and flexibility for financing. So we're going to move on to equipment loans, which is another popular type of financing. An equipment loan is a loan taken out with the purpose of purchasing equipment. The collateral is the equipment that is being purchased. GECU offers financing up to 100%. Example of equipment loans include medical equipment, dental, industrial, and automobiles. Our terms go from 3 to 7 years, and again, that depends upon the life of the equipment. We can go shorter or longer depending upon the type of equipment and the guarantees. So obtaining a business loan, obtaining an equipment loan may preserve cash flow. So the owner does not have to come out of pocket with cash to purchase the equipment. They can potentially increase or retain revenue. So if you add on a piece of equipment that can produce more product for the business, there's a potential for increased revenue. And it may add to the net value of the business. So it's a very nice type of financing. And we do offer construction loans. So we just mentioned and talked about commercial real estate. And with this is ground up construction for commercial real estate. And it is a loan utilized to finance the construction of facilities, multi-units, and retail strip centers. There is an interest-only period, which is up to 36 months. We do provide mini-perm financing, which is available. We offer a one-time close. There is a variable rate during the construction phase, and there's fixed financing available for the permanent portion. With construction loans, the borrower will have a smaller monthly payment starting off, as there is interest-only period on the balance that has been drawn during the draw process. We offer the complete package, which means we're able to cover both the construction component and the permanent financing all in one loan. And the business owner is able to build to suit. So that's a very nice type of product, and it makes it nice to, if you want to have a built to suit building. In addition, we have another type of financing product, and that is our business credit card. And that provides us purchasing power and has several features as well. So the business credit card, you can simplify purchasing with a GECU business credit card. It has no annual fee, competitive rates, and 2 times the points on every purchase. It offers unlimited point earning potential that never expires. Our business credit card was built to help you manage expenses. You can redeem points for travel, merchandise, gift cards, or cash back into GECU checking or savings account. You have an option of individual or consolidated pay. You can access to manage multiple cards through online banking, and you can add authorized users for increased account flexibility and control. There are further disclosures on business credit card that is offered at gecreditunion.org, so on our website. And then lastly, we're going to discuss the SBA Lending. So GECU has several resources in SBA Lending. We do partner with an SBA consultant, and that's able to help a borrower navigate through the SBA process. Through SBA Lending, there may be potential for less money down and longer amortizations. GECU is an express lender, which means that we are able to underwrite up to $500,000 on our own. The 2 products that we offer is 7A Lending. So that's short and long-term working capital, refinance current business debt, purchase furniture, fixtures, and supplies. We also offer 504 loans, and that is for existing buildings or land, new facilities, long-term machinery and equipment, and existing facilities can also be financed. So in the next step is to discuss what types of items do we need for an application. And this is for basic underwriting. So the deal summary, we talk with the borrower and we make a summation of what the borrower is actually looking for. We do need a GECU loan application and personal financial statement. Last 2 years of business tax returns for each business associated with the loan. Last 2 years of personal tax returns for each person associated with the loan. Current year interims, which is your current year balance sheet and income statement. Verification of income. If it is an investment real estate, we would look for rent roll. We do need to look at bank statements and a debt schedule. If this is a startup business, we would need to see a business plan. For purchases, a purchase contract, franchise agreement, buyout agreement. Those are special. It depends upon what that purchase is. Projections for the asset that is being purchased, and seller's business tax returns for the last 2 years. We just mentioned construction and renovation loans. So if that is where a borrower is looking to do, we would ask for a budget for any improvements or for the construction and plans. So we would need renovation and construction plans and AIA, so we can understand and have a better understanding of exactly what the project is going to be looking for. And we are happy to guide the borrower through this so it isn't so overwhelming. And these are the contacts. So we have dedicated commercial lenders. And as you just heard Derek talk, and he is part of our GECU Business Services Support Center, and that's who our wonderful colleagues at Brit Business Services is our main contact for our business members. Our dedicated commercial lenders, we do have a commercial and small business lending manager, and she has 3 folks that report to her. So Kathy Bollender has years of experience as a small business lender. Danny McNeil also as our commercial relationship manager, and Drew Hinais, a small business lender. So we are ready to help you, and we offer a lot of experience. It's time to wrap up our webinar, and I want to thank each one of you for attending. And if we're moving on to the question portion of the webinar.
Yes, thank you so much, Paula, for taking us through today's slides. We will now open it up for Q&A. We do have a couple questions to go through, so let's go ahead and get started. The first one is, what type of terms are offered on commercial real estate loans?
So when we talk about terms, we have 5, 7, 10, and 15-year terms, which means that interest rate is fixed. So you have the interest rate fixed for that. The amortization goes up to 25 years. So it's a very competitive product. It gives that borrower peace of mind of a smaller payment, and it helps with not having to worry so much about an interest rate change.
The next question we have is, what does a one-time close mean?
So for construction and renovation loans, that's a great question. That means that the borrower, it's a one loan. So you have your draw period, and then once that draw period ends, so you fully funded that loan, your building is built or the renovations are completed, it goes into permanent financing, but a borrower doesn't have to come back in and close on the permanent section. So it's all closed at one time. So saves the borrower money and time, and gives a peace of mind as well.
And then the next question is, how do construction loans work?
So for a construction loan, you're looking to, for example, build an industrial building. You would submit the plans that would be formulated, and we would be looking at projections and the financing that is a part of that. And we would walk you through a draw process. So there would be submissions of draws. A general contractor would be working on certain stages of that building. And the first 30 up to the 36 months is interest only. So that component is only on what has been drawn. So for example, if you have a $500,000 construction loan, you come in for your first draw and you take $50,000. That $50,000 is what you will owe. The interest only payment will be based on. And as you increase it, that interest only payment would increase. And then once you hit that permanent financing, that's when you go into principal and interest.
The next question, Paula, also comes from the chat. Do you have any insight as far as writing a business plan and what would be looked for in that plan?
So from a business plan, what we look for, I have been an underwriter. make sure that you have complete projections. Those projections are supported with what we call assumptions, which means that you've done the research, you know that how you're going to get to that number of revenue. SCORE is an excellent group, nonprofit organization that really helps with writing a business plan. Be sure to include a resume because that's part of a component of underwriting. So make sure that you have your projections and having your resume and a description of your business. So putting your vision and your plan on paper so an analyst will understand what what you're looking for in that underwriting.
Thank you. And then we have a couple more questions. Again, if anybody has a question they would like to have asked today, please put that in your question feature in your attendee panel. The next question is, what are some key factors in underwriting commercial loans?
So things to look for. FICO score, so your personal credit score, is one of the five main components. There are more, but these are some of the key. Also, we refer to it as liquidity. So what do you have as a backup plan or a savings? What's liquid? The next is, we call it business debt service coverage. That means, in a nutshell, does that business generate enough income to cover that payment? And then we take a look at the global. So that's called global business debt service coverage, which is the combination of the personal debt and personal income and business debt and business income. So we want to make sure, as a holistic whole approach, that it is that the debt can be paid, the total debt. And then we have a leverage ratio. So how levered, how much debt to the assets is owned by the business and by the personal guarantor. And years of experience. So we do look for experience in that particular chosen industry.
And then we have one more question, so we'll go ahead and end on this question and then give everybody some time back in their day. But the last question we have is there a minimum FICO score?
So across industries, it can vary. A minimum FICO at GECU on average is a 620 FICO.
Thank you. That is all the questions we have today. Again, our business services contact information is up on the screen. So if you'd like to reach out, again, go ahead and write those numbers down or take a picture of the screen. They'd be more than happy to help answer any questions you may have. And then wanted to thank Paula for taking us through today's presentation. But with that, we wanted to thank you all so much for taking the time to join us today and hope you have a great rest of your day.